Hello, great minds. Welcome again to SAFOREX Academy. My name is Joseph Samuel. I'm your instructor, and today we'll focus on a very specific and powerful topic. The last time we dealt with introduction to market structure. If you've not watched it, please kindly go back there to understand market structure. Okay, and this moment we're going to deal with market structure for buy model. That means that how the market forms a bullish structure, and then where to enter a buy trade, and what kind of candlestick to confirm your entry, what to avoid, and how to manage your risk. Okay, but before we go into the class of the day, please kindly click on the subscribe button, subscribe, share the link to every other individual you feel like they are interested in market or in trading the financial market. All right, so this class will make you confident in identify when to buy, where to buy, and why to buy. Okay, so let's get started. What is a buy model in market structure? What is a buy model in market structure? A buy model simply means price is in a bullish market structure. So we'll be seeing more chart examples and the likes on and why you can how to identify it. So price forms higher highs and higher lows. Okay, we talked previously that in buy market, okay, market will always for bullish market, price always form higher highs and higher lows, right? And so that this mid leg or this mid leg in direction of the trend is what we call the impulsive leg, right? Then each pullback will respect this previous higher low that was created. Okay, it will respect this previous higher low that was created. It does not want to see it being what's it called, being neglected. Okay, price will definitely respect it and break the next high that was created to show that it's actually moving in that line of direction. Okay, so this is the DNA of the of an uptrend. So there are key things you need to understand or we need to pay attention to. Number one is that an accumulation phase. We said that the market actually moves in three different phases, right? We said that the uptrend, the buy trend, or the downtrend, and the sideways. Okay, the accumulation phase is the sideways or down slowly. Okay, what I mean is market can be doing something like this. Market can be doing something like this slowly, like it's going down, but the down is very very slow. But just that repeatedly it just for me something slow. Okay, then after that it will do a what's it called, a manipulation to take out all of this slow movement. Okay, take out this slow movement. You want to do manipulations, right? Then it will now pull up. Okay, it will now do a called distribution. After this accumulation, now it has accumulation, it has manipulated. That is, people have think that okay, it's actually coming down, so it now manipulates them by going their direction and feel like okay, trick them into it. Then they keep a sell, okay, thinking it's going down. But why market will now do what? Distribute to the upside. Okay, it will now distribute to the upside. So what that does is that it now do what is called a change of character and then reverse, then break structure to the upside. This is what we always see in buy setup. Okay, in buy setup. So market will now do it and continue in the expansive state. This is an expansive state, right? So so now there are two major ways that okay, now then you will now want to enter after this one has been confirmed to break high. After this manipulation, you see market now do this, breaks high, right? And then now do the retracement, right? This is going to change your character. You do this retracement, okay, and breaks high. This is where you will now wait for the retracement. We know we've talked about what to use for confirmations, right? Which is a swing low. You want to see a swing low being formed here. Once that swing low has been formed, then you can enter for a buy. Then put your stop loss below this low or below this manipulation low, right? Then target higher high and stay in the direction of the trend, okay, of the trend. So before we go on, okay, I want to repeat myself that how you recognize the ideal buy setup, okay, how you recognize the ideal buy setup. First of all, you want to see that market actually, if it's moving downward like this in the accumulation phase, right, you want to see that market actually do a manipulation, okay, to take out inducement, liquidity grab. So this one you'll be seeing that small weeks, take it out. Then you want to see market now going against that direction. They're doing a retracement. This will give you your change of character. This is not your change of character. Don't mark here. No. You mark the major high of the breakout. So for here, let me assume this is my major high. Let me just mark it here like this. Okay. You mark it out like this. So market breaks it out. When market breaks it out, then you want to see the breaks it out. You want to see the under breakout, a retracement, the under breakout, okay. Then you want to see a retracement, which is a pullback before you enter. So you enter at this pullback with a confirmation of what? Of a swing low or a candlestick pattern, right? A candlestick formation. So when that one is done, you are expecting the price to take out the next high continuously, right? Okay, so now in that confirmation, in that line, let's look at how buy markets actually form. There are two ways at which buy markets can form. The first way is the fact that you want to see what is called a sweep of liquidity. So market can be like this, coming down and take out a major low, which is what we used to call liquidity. Take out a major low, then break high. You know, initially this price is coming down from uptrend. You don't expect it to take out this major low, right? So it will now break high. After breaking high, market will now do what? Retrace. This is where you first come. This is your beginning of confirmations of trade. Now this is one we are going deeper. Now in this one, you are not waiting for any major break. So this one, you are not waiting for break twice at times. No, for confirmations you can wait for break twice. So don't get me wrong. So when you see a major low being swept, when we make a major low, know that there's a swing low here, right? There's a swing low. Then market now sweep it out. I'll call it change your character, liquidity grab. So when market do this liquidity grab, okay, after the market has done this liquidity grab, you will now expect market to break high. When the market breaks this high, what you anticipate immediately is that you are waiting for market to retrace. Retrace to a discount level. Now we'll do premium and discount. So very, very essential. Okay, retrace to a discount level, not equilibrium. Even though equilibriums are also very good, you understand that one with context. So retrace to a discount level. After retrace, you want to see a swing low form. I'm just teaching you swing lows now repeatedly, or a rejection candle, or a pin bar, or an indecision candle, right? Then market will now, this is where you will now enter your own market and then continue upward. This one will help you to sight buy model early enough instead of waiting for two breaks. Like, you know, initially we said we will change your character, then wait for retracement, wait for second break of structure, then wait for the retracement again before you now enter here and buy, right? No, but in this case, you wait after you see the sweep of liquidity, a value sweep of liquidity, a break of structure. Now, when you want to see that a market do a value sweep of liquidity, right, and a valid break of structure here, don't really call it change of character or break of structure, okay? what you want to see is that you want to see that when this price of chart was moving upward, the consistent green candle moving upward, you don't want to see a swing low, a minor low being created, like something like this. Even though some people call it first type A setup, type B setup, like that. I don't want to see something like, oh sorry, I will adjust that. I don't want to see something like this. Even though it's another model for buy entry, for buy setup. Even though it's another model for buy setup. But for this structure, this is the direct one. This is another structure. Okay? This is another structure. If it's this structure that was created, right? I want to see that it does not break this other low, which will lead me to the second part. This model is called a sweep of liquidity model. Why this model is called a failure swing model? Failure because the market fails to break this low. Initially, we've had a sweep of liquidity, right? And now market fails to break this low. The market goes up. So this failure swing model can be in two phases. The second phase of failure swing model will be like this. You want to see price coming like this from the downtrend, right? And immediately fail to break this low. Instead, just like this and just go like this and break this high like this. The market, we will expect market come here and then you take your entry and you move on. These are three states of buying models of the market. These are three states of buying models. This is how you watch market to buy. So you are buying. When you see this structure, you are buying. These are different structures you are buying. So let's check some of them on the chart. We will quickly see them. Before we continue some other analysis. Let's check the chart. So initially here, I was saying that price, if you check the previous video, price is expected to buy from this zone. This is forming a swing low already. This rejection here, if I go on 5 minutes, you will see what I'm talking about. See, 1, 1, 2, 3. Price enter at this point. Price reach here. Now this market, now this is this is a low. This market now we expect that it takes out this high. But for me that we used to enter earlier enough, since I've marked out my zone, so initially we have marked that our zone, those are what I'll be looking out for. So when we talk to precisions and precision entries and the like, right? Now this was a low that was created and price actually break it out, right? Broke it out. So after we've marked out a zone like this, market come into the zone. Market come into the zone and just tap in and we move on and on and on like that, right? Okay, sorry. So market just come to the zone and tap in. Okay, so we buy, and it is on 1 hour time frame. I'm waiting for. As I see this rejection, this is a entry model for me. So potential you are following. Okay, let me wait for the. If it's on 1 hour time frame, you have seen this swing low. This is 1, 2. I'm told that the next top candle, this 1 hour candle that is closed now, should close above this candle. When it close above this candle, I will enter at the close of this third candle. That means in the next 47 minutes. At the close of this candle is when I will now enter my market for buy, and I will target here as my TP, if at most. But meanwhile, your stop loss will be below here. Minimal stop risk to reward ratio. So if it will be valid, so that is how price actually does. So we are looking at buy model. Now look at this model here. What did you see here? Now market, this is a swing low. Sorry, a swing high rather. This is a swing high, right? The price was coming down, right? Created this high, right? Created this high. You see bias rejected, it created this high. But what did you see? See market actually sweep this low. This was swing low rather. So market created a swing, created this major low, break this major low. This is what we call a sweep of liquidity. look at our diagram. Let's go back so you can see what we're talking about. Where is my chart? Oh, where did I draw my diagrams? Trading G, where is my diagram? All right, thank you. So you see now, market sweep out the low and break the major high. So let's go back to our chart and you see. So sweep of liquidity. So when market swept this liquidity, right? What happened? Market broke this structure here, break the high. Our market breaks this high. What me I'll be thinking of is the retracement to form a swing low and an enter. So when it created the major high, this was the high, and this becomes the swing low. This is where I will enter straight and enter at the formation of the close of the third candle. So I can enter here. Yes, enter here, put stop loss here. You are still moving profitably and see how massive the market moves your direction. So you feel like if I enter here, market has sold here, yes, it sell. The market will not have the profit for you. It sold 1 hour candle before going your direction. Still, and if you miss it, if you take this 1, 2, 3, a close above this candle becomes your major low. But this is the swing low, not this. It is this one, not this. So if you miss it, this is another one that want to look like it. You move and you go on. That is how market. And if you miss it like this one now, we miss all this entry and see what we did here. See where we pick market here. See this 1, 2, 3. I'll pick our market at the entry of this close of this candle here. Market came here, tap us in and we target the high of the market. Market came back here. See this market here. Sorry. These are how we show confirmations here. Alright, so this is gold and XAUUSD markouts. Alright, so I could have, sorry, I was not online when the market was making, but since I've seen this market now, if I go to my lower time frame and target, I already said in the period that either I want to see market coming at least 50%, right? Or if since the market is still in a bullish trend, I will target above the high. So this is a buy model. So I can come here, target the high. Market already take me in now. Okay. So market takes me in. Now we are in the market. As soon as we are in the market, we begin to observe what happens. So perhaps you miss the market on this one out of it. Don't just rush and chase the market. You can patiently wait for the close of this market, knowing fully well that this market will close above this candlestick formula will close above this candlestick, and you can enter at the close of that candlestick, next candlestick, put your stop loss below the low and target the high. Peradventure, if it does not end in what's it called, an indecision candle, please, and that one is also very valid, because this market here can, I'm saying something I'm talking to teach here, but for now it's still in an uptrend, so that confidence may not work here. If I thought it will trade, I need to cover 50% of this candlestick, of this large candlestick, and 50% of it will be covered up. So up to here, you can see that we are sure the market will get at least up to here before any other warawara will bust up in the market. Okay, so like we said earlier, so where should you look for your buy? We said it, right? Where should you go? So that is the first structure. We've been able to identify this one. Super liquidity market break above here. This is a break of structure. We wait for market to retrace. We have a swing low and we enter the buy. That's for instant executions of buy. So let's see another different market scenario for buy model. Let me see. Let me see. Okay, this is another scenario to see market here. Take out a major low, sweep of liquidity, right? And break structure above here. And what happens? You wait for a swing low to enter the market, then you buy. How we are seeing this very clearly? How we are seeing it? A sweep of liquidity, market sweep below. This low actually breaks the high here, right? What happened to the market? Market actually retraced a bit, created your swing low. You didn't know when it entered one candle finish. You see rejection. You see this candle forming. You see a rejection candle. You see the third one closing above the other candle. You went at the close of this candle. Put your stop loss below this low. Then you target. Here is your first TP. About this high is your first TP. Okay, so this will give you like 1:2 or 1:3 thereabout. Then you target, then you can mitigate your stop loss to break even and keep observing the market, seeing this reaction. If you are in the direction, since you are attacking this guy, you keep moving like that. All right, so let me chat again. Let's see. Let's just quickly scan through. Let's quickly scan through. Let me check 4 hours time frame. Okay. So give me 1 minute, 1 day. Okay, all the sandals. Okay. So now, yes, I think this is a very another valid one. Though market is coming down like this, right? Come down like this. Now see market now fails to break this low, right? What does it do? Actually took out, and even though it doesn't create this high, so you can see market coming in and see what fails to break this low, and market will keep going higher. So this is another schematic. You can see it. This was a buy model. This is another buy model, right? This is another buy model, right? This is an inducement, like what we said. Okay, if we draw out the schematic very well, you see that market is bullish initially, right? Market is bullish, but at this point now, it's break structure here, right? Change it to somebody that you want to sell. Fails to break this, right? Now you are thinking that, okay, possible, since it fails to break this high, right? You are thinking that possible the market might want to coming down. But what does it do? Fails again to break this low. When you are actually failing market to obey certain structures, see swing lows. Created that high, reducement, market came here, create swing low, 1, 2, 3 candle. How we are saying we have seen it like this, break it high. Come and take everything out again as inducement, right? Because this is an equal low. Take it out again. This is your major low. Market still fails to break this major low. Fail here and then break high, and you see continuity in the trend of the market, and you can see how massive it's going. This is your daily time frame. So imagine you see this on a daily time frame. Oh boy. So the market is flatter though. It's what happened in 5 minutes time frame that same structure happens in 1 hour time frame. So you see market again creating you a swing low opportunity for entering again. 1, 2, 3. You enter at the close of the candle here. Your stop loss below here. See what market is doing. See, and see how market keep moving like that. So that is structure. That is buy model. So you go to your chart. And you Okay, you go to your chart. Sorry. So we've known our entry models, right? So go to your chart now on trading view or MetaTrader MT5. Pick a pair with a bullish trend. And I believe we just buy trend here. Pick a pair with a bullish trend, okay? Mark out most recent break of structures, change your characters, the higher low zones, okay? Screenshot and label and screenshot or save. Know how to save. This is your download button. Take a screenshot, right? Then you send to us, okay? So go to 15 minutes time frame. Even if you pick analysis on 1 hour of the life, okay? Go to 15 minutes time frame, okay? And okay, another thing you can use for your entry is we've talked about. Either use your bullish engulfing candle. Yeah, it's very essential. For buy model, you want to see bullish engulfing candle too for your entries. In most cases, bullish engulfing. So you can see here now, say here, after this 1, 2, you can see that this candle engulfed this candle. So you enter the close of this candle, right? And market your stop loss below here. Keep it. So if I want to mark it, I'll just do something like this. Long. This is the long position, then I place it like this. This is my entry and my stop loss below here. So market take me in and I target 1:2 or 1:3 or 1:4, 1:5, as sweet as I love. Alright, so where do you put your stop loss? What do you use for your conference? Write all of those things down and note them. So would you buy again if price retraces to that zone? Yes or no? I leave it that to you. Okay, so and that is the end of our session for market structure on buy model. One of the most profitable strategy for any trader. So it's an advanced model. You know, we are not giving you beans here. We are giving you raw. You can see we are not hiding anything. So always remember that structure in your direction, right? Candlestick is your confirmation. You understand the 3 models we draw down for buy setups, okay? Go to your chart and mark out those structures. Train your eyes to see them, okay, repeatedly, okay? So in the next class, I will deal with buy model for sell structure. So how do you identify the sell structure? What happened? How to spot trend reversal early, okay? So if you found value, please like, subscribe to SAFOREX Academy, and comment buy smart. You know, go to the comment section and click and write buy smart. I'm just somewhere, and this is SAFOREX Academy, where we train smart, structured, and spiritually disciplined traders. See you when I see you again. Peace out.